Hello traders, Gary Wagner here, about 10:15 in Honolulu, 4:15 in New York. It is Wednesday, 28th day of October 2015, and this is the daily report for gold and silver. The markets have closed and the Fed has spoken. Dramatic range in the market. As it traded overseas, it was up dramatically, trading to a high of 1183 on the day, putting it up substantially, I believe about $18 on the day, currently trading off about $10 on the day, near the lows at 1156 and change, with a low of 1152.45. Traders, so on today's show, I want to make sense of the activity, the most recent activity that we've seen, put it in a technical perspective. Of course, the fact that there might be a rate hike as early as December, although there's not many out there that believe that that will actually happen. But we had a substantial upside move in the U.S. dollar trading up about 0.75%, well over 97. When you look at a daily chart of the dollar, this being a Japanese average chart, we'll convert it in a second to a standard chart, but you can see the dynamic moves that we've seen recently. And of course, that becomes extremely evident when we look at our daily chart. We had this dramatic upside move from about 95 almost to 96.5. That occurred last week, of course, this being Wednesday. Friday topped it off going over 97. Then Monday and Tuesday, we had small retracements in the dollar, only to see it really take off. And right now, I don't see any real technical levels of resistance coming into play or into the market in terms of the dollar index till about 98. So we want to take that definitely into consideration in terms of the move that we saw today in gold. And traders, if you recall, we have been deeply ingrained in a corrective wave in gold, and we've been ingrained in this wave ever since this market topped out at around 90. Of course, we got in a long trade at 44 right here. Market came down, we got out right here at about 78, and that market has really not shown any kinds of signs of support since the point that we did pull profits. Now, the other thing is that I have been looking for this correction to unfold or unravel as some sort of an A, B, C corrective period. And up until now, we really couldn't see that kind of unfolding in that way. However, we really saw a remarkable move in the market as this market traded higher today, and the only way that I can actually illustrate that is to take us down to a 240-minute chart. And when you do that, you know that I was looking for some sort of an ABC. And I believe that as this market came down and tested these lows right in here, this is the point I thought we had concluded somewhat of our A. Of course, this market came in lower and broke down to about 62, but I believe that we were seeing some kind of an A. Now, in fact, if we're seeing some kind of an A, and I'm going to have to really redo this particular line because I've based these lows here as a channel so that we could say that what we would see in B would be a move from these lows up to anywhere between 50 to 75% that of our A wave. Now, I'll adjust it in a second. All it's going to do is take it a little bit lower. But in fact, we did, I believe now, get that A completed roughly on the, call it the 22nd or 23rd of this month. And then we had this market really generate a almost flat line coming into the release of minutes or statements made by the Fed, I should say. And then I do believe that on today's trading activity, we certainly got into that range, and I believe that we completed our B wave and are now in our C wave. And my target for the C wave, as I've said all along, is roughly 1150. So traders, what I have done is I have adjusted this level of lows that we got for the conclusion of A. I was a little bit premature in looking at A being here. When we do that, we get our 50 to 75% B wave in terms of our upside target to come in this green zone, so to speak. And as I said before I moved it down, all it would do would be to lower it a little bit. But we certainly have met all the criteria that we were looking for as this market came up last night and traded to these highs being just below 1184, which is now pegged at the upper end or the 75% range. 1175, that was the lower part, meaning if we take a look at this market from a 50 to 75% move of A, we should have the market move as high as 84. Now, we've certainly got that. So my belief right now is that when we consider A and a B, in fact, let's do that again a little bit cleaner. But when we consider this move of our A wave down, our B wave up, and now we are in our C. Where will this C terminate? Well, as I said, my basic belief is that it should terminate somewhere around 1150. And at that point, we should re-enter a impulse phase in which we'll see waves up, 1, 2, 3, 4, 5 up rather than an ABC down. And this will be our point of entry for our next trade on the long side once we wash out any more downside potential. Now, we could, of course, find some sort of support here, but when I look historically speaking, and again, this is a very, very short-term chart, 4 hours per candle, but you do have a little bit of support based upon these bodies right in here, but they do go as low as our basic target or area. So that's really the point that I'm going to look for. But traders, I do believe that we have first completed our A, and now I believe that we have completed our B. I've been looking for that spike up before a drop, but I certainly did not think that we would see the spike up and the drop all in a 24-hour period. And in fact, that's just what we saw. Now, oddly enough, that is the market under pressure. Silver trading up 0.75%, up about 12 cents on the day. From yesterday's video report, you know that what I'm looking for in terms of critical support in this market is roughly this area here, which is about 1570 to about 1550. That's my kind of zone of critical support level. As long as we have prices hold in this area, it's going to look to take out some of these tops that have come in here. I don't think it's going to get this high, obviously, but we'll look at some of these potential tops, meaning it's an easy move back to 16, but it could flirt with 17 once again. We will have to see, but silver certainly did not succumb to the same pressures as gold. And the same is true for platinum, up over 1,000 again, up $14, and that is trading up really almost 1.5% on the day. And traders, to really give you an idea of the entire complex right now, the precious metals complex, and how the dollar has been affecting it, of course, dollar defining and strong today, definitely having weight upon the entire precious metals group, whether it's gold, silver, platinum, or palladium. However, when we take a look at the net change of the market, whereas we had tremendous rises, and these, of course, are in our industrial metals, metals that are highly used in technical components. Those all fared well. Those all closed extremely in positive territory, except for gold, which you had to subtract a strong dollar and subtract selling, and that's where we're getting our net change of off about $10 on the day. So unlike the entire complex in precious metals, gold is the only one that really has been under tremendous selling pressure. Crude oil, incredible move today, up almost 7% on the day, closing up almost $3 a barrel to close really almost at $46 a barrel. Just strong move, and of course that's based upon some supply reports that came out today. As I said, I am looking at gold right now in terms of the potential that we will see once we define and complete this final C wave down. I think we are either there or very close to being there. We're only dollars from the point that I'm looking at, with the market currently trading roughly at 56, and our target is 50. So we're within striking range, and that's the point we will certainly want to initiate positions from the long side. This has been Gary Wagner, wishing you, as always, good trading, and we will talk to you on Thursday. Bye-bye.